Lime is going public.
In celebration of Lime's stock IPO, I'm going to attempt a backflip on one of their scooters.
But before the excitement, our mission is break this IPO down into 3 critical points for you.
First, is this actually a great business?
Second, can it become a real capital compounder?
And finally, is it a great investment for you?
Well, to answer that first one, we first have to see if the core business actually works.
Lime offers these dockless e-scooters and e-bikes.
When you're tired of walking, but you need to get across town, it's awesome to see one of those Lime e-scooters or e-bikes on the corner just waiting for a ride.
One of their secret weapons is their exclusive partnership with Uber. They're integrated right into the Uber app.
And that integration drives about 14% of their total revenue. It acts as this massive competitive moat against rivals.
Because the friction is gone. You don't have to download a new app or type in your credit card on the sidewalk. You just use the Uber app you already have.
And looking at their scale, the numbers are just massive.
Oh, totally. 19 million riders in 2025 alone. And that's across 230 global cities.
They actually boast over 1 billion historical trips.
1 billion trips. That is insane. And it really shows up in their revenue, right? Because they generated $886.7 million in 2025, which is up 29% year over year.
How big can this actually get, the total market size?
So their current Serviceable Addressable Market, or SAM, is around $6.1 billion. But if they just reach a 30% adoption globally, their total addressable market balloons to this crazy $69.1 billion.
The vehicles literally are the billboards, so brand awareness will naturally expand as they scale.
I like the sound of that when thinking about compounding.
Okay, but a massive market and a great moat mean nothing if the math doesn't check out.
Which brings us to the financial roadmap.
In 2025, their operating income was really strong, right? At $70.4 million. But their net income was actually a loss of $59.3 million.
Where's all that money going?
It looks bad at first glance, but the culprit is just massive debt. Buying tens of thousands of physical scooters takes a lot of upfront capital.
Okay. So, here's the mathematical discovery we found in the filing. At $25 per share with 64 million shares, the company's valued at roughly $1.6 billion.
Along with share conversions for the convertible notes, they're using the proceeds from this IPO to pay off their debt.
So, if we remove that debt equation from the expense math, their net income totally flips. It goes from a $59 million loss to a projected $1 million profit immediately post-IPO.
Exactly. It cleans up the balance sheet overnight.
Once that balance sheet is cleaned up, it really opens up the compounding possibilities.
With the average fully landed vehicle cost at just $1,300 in 2025.
And the average revenue per vehicle per day at $7.47.
Their payback, assuming their quoted 50% margins, is just 1 year.
Yeah. I mean, combining a $1.6 billion valuation with a $69 billion total market and that immediate post-IPO profitability shift we just talked about, it makes for a super compelling expected rate of return, assuming they hit those growth targets.
Definitely. Lime really proves to be a solid business with a massive market and a newly cleaned-up profitable balance sheet. It's a highly intriguing investment.
But the big question, is the stock price going to go up or down?
And is Bull going to land head up or head down? The excitement is just beginning.